So we're back with the options trading experiment where we're taking $500 and we're gonna see if we can turn that into $1,000 by the end of the year, or if we're gonna go broke before the end of the year. This is week 2. We got some good trades in, but if you wanna see week 1, there will be a card on the top right. But anyways, let's get right into it. Starting off with our account, going into week 2, our totals are looking like this. We've profited on one of the 2 trades that we've done. We have a net gain of around $2 on the account, and our option money is sitting at 502. So going back to a trade that we opened up on March 27th, Friday, we opened up a call credit spread on Nike with an $85 strike on the call that we sold. We collected $30 in premium, and we have a max loss of $70 on this trade. So let's take a look at Nike during the week. So we opened up the spread on Friday while the stock was trading at around $81.40. And of course, with my luck, as soon as I opened the spread, the stock goes roaring up, even passing the $85 strike price, and it even stayed above the $85 strike price for some time until Wednesday. And then on Wednesday, the stock just took a nosedive, going as low as $77.50, closing on Thursday just below $80. Now, I wish I can say that that's a phenomenal thing, and it is, but mistakes were made and I closed the position way too early at around this price point. And we can look at the trade here. I just wanted to secure the profits. I saw that I could take 50% of the premium that I collected, and I went ahead and I closed out the trade for $15, as you can see on the screen. So to recap this trade, we received $30 in premium for opening the spread, and then we ended up paying $15 to close the spread, pocketing the other $15, which resulted in the $15 gain. So yes, the stock ended up closing even lower than Thursday's close on Friday, which was the expiration date. I exited the position way too early, but hey, I don't want to get greedy. I think that's one of the things that can kill an options account or an options trader, is getting greedy and not taking profits. This time I got the short end of the stick, but I know down the road, by taking profits early, I'm gonna save myself some money. But hey, we'll take what we can get. No one ever lost money taking profits. So moving on, we got Johnson & Johnson. So we made a play on Johnson & Johnson, and at the time of purchase, looking at the charts, we saw that the MACD was showing positive momentum as the MACD line crossing the signal line. However, the RSI was a bit flat, hovering at around 50, but then something that caught my eye was this gap up from 123 to 133 on the stock. And if we take a closer look, we can see that Johnson & Johnson jumped up 8% with news on their coronavirus vaccine to be tested on humans by September. And if you look at the chart, you can see the big gap there from 123 to about 133. And that gave me 2 ideas or 2 plays on this stock. So we could assume that the gap doesn't get filled. We can buy a put credit spread at around 130 and just hope that the stock continues to rise up. Or we can play a little bit more conservative, predict that the gap will get filled, and just buy a put credit spread at around 124, which I think the stock won't be going lower than that 123, 124 mark. Of course, with the put credit spread at 130, we'll be getting significantly more premium, but the 124 put credit spread seems a little bit better as far as risk management goes. So that's what we went ahead and did. We opened up the Johnson & Johnson options chain. We went ahead and we selected the April 9th expiration date, giving us a little bit of time just in case the trade doesn't go our way. And we went ahead and we sold the put at the 124 strike price. Now I'm feeling really good about this trade. I don't think the stock is gonna go much lower from the gap, which it gapped up from 123. So I went ahead and sold the 124 put and then bought the 123 to minimize our risk. We just got one contract and we tried to get filled at a $20 premium. And as always, when you're opening up a spread, if it's a credit spread, you wanna click credit, hit submit. And luckily our trade did get filled at the $20 premium. So we collected $20. We sold the 124 short put expiring on 4/9. and we also purchased the 123 put, capping our max loss at $80 on this trade. So if we look at Johnson & Johnson during the week, we opened up the trade while the stock was trading at around 131, and our floor per se is at the 124 mark, so I'm feeling really good about this trade. The stock ended up closing on Friday, April 3rd at 134.03. So we're doing pretty good on this trade, feeling really good about it. Hopefully we can cash in the majority of the premium collected for this Johnson & Johnson put credit spread. Now we also got another trade coming up with Bank of America, and at the time of purchase, the MACD wasn't showing too much, and neither was the RSI. It was around flat at 39, but we see an old friend here, a gap, but this time a gap down. The stock went from $21.23 to $19.77, which represents a 7% drop. So taking a look at Bank of America, we can see that the gap down happened on Wednesday, which was a 7% drop. And as far as that gap being filled, honestly, I'm not too sure. There is a lot of pressure on banks right now, and I don't think that gap will get filled, or at least it won't get filled immediately. So my thought process was, okay, there's some sort of support level at the 1950, but honestly, that could very easily break. And if it does break, I'm banking on the 1808 support to kick in and hopefully bounce back up from that point. Now, honestly, if the 1950 gets broken, that support level is not going to hold up the 1808. So, I mean, I guess we'll see how this turns out, but we did ended up opening this trade and we picked the $18 strike on a put credit spread. So we have here on the screen purchasing the option. The option did ended up getting filled. We got $20 in premium. We went ahead and we sold an $18 strike put expiring 4/17, and I picked 4/17 just to give me some time and let Bank of America gain some momentum, which I think it will have as time goes along. We also bought a long put at the $17 strike just to cap our losses at $80. So I'm feeling pretty confident about this trade. I think we could collect the majority of the premium on this trade as well, but I guess we'll see what happens. So that's pretty much the end of week 2. And now just to do a quick recap, we collected $15 on a call credit spread. We currently have a pending put credit spread on Johnson & Johnson expiring April 9th. And we also have another put credit spread on Bank of America expiring on the 17th. So far this week, we made $15 on the call credit spread that we sold too early. And if we take a look at our account for the end of the week, April 3rd, we have profited on 2 of the 3 trades that we've done. We have total gains of $17 on the account, and our option money is sitting at $517, which is a pretty nice growth. That's 3.4% growth. I'm looking forward to continue to keep growing this account and hopefully not lose everything on one silly trade. But anyways, that's pretty much it. Thank you so much for watching. If you want to check out week 1, again, there's going to be another card on the top right of the screen. Thanks for watching.